Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're here now at, what time are we? Just around 6:23 p.m. Central Time on this Monday, September 20th, Fed Day. Let me use these words: patience, cautious, resilient. So let's go into what these mean. The Fed kept saying how cautious they want to be over and over. So they're at a tipping point. They don't want to hurt the economy, but they want to keep their inflation fight working. They've already said that one of their mandates, they said this again today, strengthen the labor market is surprisingly still there. They don't think that the unemployment rate will go as high as they originally forecast it would go. But because of the strength in the overall economy, they want to keep the option open to raise another hike this year. And on the dot plot, which is no more than a game plan that changes, like a football game. My plan's this right now, but next play I'll change the game plan to that. Got it? So this gives you a game plan to the next quarter, not a football quarter, but to the next real quarter when there'll be another dot plot. Got it? And that's when we'll see what that's going to be. But now they're saying instead of 3 to 4 cuts, 2. And instead of maybe the real rate coming down from the 5.5 to 4.6, more like 5.1. Uh-oh. So that means that at this point in time, and I cannot emphasize this enough, it is a moving target. The Fed chair talked about it. No matter how you try to figure this stuff out, you've got to be flexible. Things change. There's new parts that come into the equation. High energy prices. They didn't see this at the last meeting. I can tell you that. The prices shot up. The UAW strike, you got to deal with that. You got college loan payments about to happen. But that's not their mandate. Their mandate is labor and inflation, and that's where it ends. The rest is the Treasury, the U.S. government. They don't step out of what they have to watch. So how do you look at this? I look at it that it is still a mixture where the Fed's going to stay vigilant, strong, longer than normal. However, I will be proven wrong. And why? Because each time we get a big break in the market, the naysayers step in and they buy the stock indices and the individual stocks, and they find a reason to do it. There should be no difference this time around from that. Okay, so I want to be very clear. This is in my newsletter. It's why I wrote a special report for some people tonight on this, and that's what I'm saying. I'm saying that I do believe September is working in the sense that one of the weakest months of the year. I think it's unfolding in front of you. This particular week is probably one of the weakest, if not the weakest week of the year historically. Historically means you're looking back and it worked out that way. You can't predict with history. You get an idea that whatever factors there were, why does it keep happening over and over? And it does. There's something at work there. That's all that it is. If you try to read more into it, God bless you. I don't know that it is more than that. And I have been a student of cycles, seasonals, my whole trading career. But that's what I've come to believe out of it, okay? So I think that we're going to have more of the same. The Fed didn't say that they're going up the quarter point this year. They said the option is open. It's penciled in if it's needed. Do you understand that? So it's dovish and it's bullish all at the same time. It's two different ways. It's certainly bullish on the bonds and notes. I thought it was a bit dovish, and yet the stock market didn't like it because it means interest rates are going to be higher for longer. That's the theme that broke the stock market late in the day. I've given it to you in a nutshell. Forget all the rest. Higher for longer is the thing that the market will look at. So when I come over here and I look at the market is fighting its battle at the 18-day average of closes. You know that I was looking for that to take place. So in looking at that as the spot, that is it. Now, what it does from here is anybody's guess. That's on a closing basis. Let's look at where the market is for the high of this month. 45.65.75 approximately. This is where market finished, actually, I believe, on August. And then the market is down. So you're already down from 45.65 to 44.43, 200 points. If you're arguing that September is not a weak month, I cannot tell you how the month's going to end up, but I can tell you it's offered in the first 2/3 of the month that it has done its job of breaking. What about here? Higher high, lower low. No trend that I'm seeing. Market's back to the 100-day average. Where's the bigger support? You're on it. The Bollinger Band at 44.43 in the 100-day average, and we just talked about this yesterday. That could be one of the supports in the market. You're on it. If it really gives way in a big manner, don't you dare rule out that you can't get down all the way into the 4,300 level, that 42.86 zone. When we look at momentum, you're already oversold. So for those that were bearish, I would think they're covering their shorts right here, the combination of a 100-day average and the Bollinger Band. Next, I come over to the, what is my core? To the micro E-mini NASDAQ. I'm laughing. I was typing this in a hurry. And you know, when you look at it, it looks right. Higher high, lower low. Same identical thing. Here's the high as to where we were August 31st, 15,733. We are 600 points down from there. Here is the Dow, 35,121 right at the beginning of the month. And you are down now 500 points from that high already. Are you getting the theme? It is to the downside. That's what the market's doing. But all of these are getting into the zone of the covering. The 100-day to the Bollinger Band there. If I come back here, the Bollinger Band 100-day average oversold in the right through here. And let me get to the others because I wanted to do it the right way. Here we go. You're right in the neighborhood that I wanted to be, and you're coming down right here. So I'm seeing that the marketplace fighting, and it fought a battle here in the Russell. Which one do I think is the weakest? The Russell, clearly. Why? Take a look at the slow stochastic reading. Both numbers, you can't use today's reading of 2 and 8, but you can go to yesterday, the close of business Wednesday, both under 20, both under 20, both under 20. So 3 days in a row prior to that. So guess what? That's the embedded reading. That's the most bearish signal when it embeds to the bear reading. It's most bullish when it's over 80 doing that I have. Tells me on good rallies in the market, the pros are waiting to hit this market. You'll say, oh, it's not going to keep going down. And I'm going to go, sure, I know you're right. No, you're not. You were at 1921 20 days ago. You're now coming in here, what are you, 1823? You've dropped 200 points in the market. So when people tell me, and I keep bringing up to you here things, you got a seasonal that's pretty strong. This is the weakest month of the year, the weakest week of the year. I know that people laugh it off, and I get people right, and I go, okay. Doesn't matter. I speak what I see. I do an awful lot of reading. It doesn't mean it has to work. I agree with you. Just because something worked a bunch of times doesn't mean it has to work again, and I mean what I'm saying. That's not being facetious. However, I am a student of cycles. I am a student of seasonals. I am one of these guys that's still saying to you right now, the naysayers are going to use this break. They will find the way, as they have done every single time, to come into the marketplace in those stock indices and find a reason to buy it. I don't think they'll do it in September. I think they'll do it starting in October. I could be wrong. They could do it earlier. I agree. But they will do it, and I believe. And I think they'll be right, as they've been all the year long. So I am looking, and I said it to you before, I get a break now. We set ourselves up in October wobbling, and we start, I think, forming another bottom into year end. In the 10-year notes, lower highs, lower lows. Now you're breaking through everything. Anyone that tells you that, they keep saying, well, if you get over 434, 435, you're going to get stops to carry the market. You're in that position now. So this is a market that is adding to its bearishness. The same in the 5-year note. Real rates keep marching forward. That'll weigh on the metal markets. That'll weigh on commodities as a grouping. That'll weigh on a number of things until it stops doing that. So you've got to be careful. And it doesn't make the dollar bearish. As our rates keep going up in comparison to so many banks that want to go flat, which is one of them tomorrow may be the Bank of England at 6 in the morning. Our currency just keeps advancing for the moment against it. In the dollar, you have the bullish embedded reading. I just said it. I don't have a stronger signal. When it's over, the red line will close under 79, and that's my signal to walk away. It can wobble there a bit, but that would be my signal. Until it occurs, I contend the pros are buying the breaks, looking for, again, the possibility of that Bollinger Band. The bearish embedded reading is at work in the euro. I think the pros will sell the rally if they can get one here. There's a way to do it. I teach it in the enhanced Bollinger Band course. Remember that. In the British pound, I don't want to go into what the Bank of England does or doesn't do. We'll see it. We'll see the reaction, and then it's out of the way. We know they are dying, and I use that word, dying to stop raising rates. They don't want to keep choking their economy off. The European Central Bank wants to stop raising rates. Look what they're doing to the biggest economy that makes it up, Germany. They've taken this down. Their industrial production is in the toilet. They can't keep doing that. They realize that they got themselves caught into stagflation. Be careful. We don't want to end up with that in America. In the Bitcoin, you're getting overbought. I thought you'd run into resistance on the first challenge of the black dash line, the Bollinger Band. You normally stay within those bands 95% of the time. So the first time you hit it, and you haven't hit it since way back here, why would I think it's not going to work? I would think it's going to work, and it has, the first challenge of it. In Brent versus WTI, to get this bullish, you've got to get the market back over the 394 area, where Brent is gaining more on any rallies or breaks. It's holding better than the WTI. Right now, they keep narrowing in the difference, and the resistance point is that 18th day. Then when I come to November Brent, I am concerned. We're getting the first flirting that the market's losing its embedded reading. And if it gets lost, it stands the possibility of wherever it finishes getting back to the 18-day average of closest to find support. And the same as in the WTI. So yes, I am concerned. That's one of the signals I don't want to see. But at 6:35, I'm not worried about it yet, okay? I'll worry about it in the morning because this is the gyrations that you would expect it to do. But your horns go up on your head. Oh, that's losing. No, I don't think I want to be a buyer when that's occurring. You know, different things should be coming into your brain. In the heating oil, so what we've got here is higher lows, lower highs coming down. Market's losing its momentum right here. It still could be going back to that 18-day average for support. And tomorrow we're going to get the natural gas storage number. You want to pay attention. Do you realize, I think it's San Antonio, it's day after day after day after day, over 100 of them, of over 100 degrees. Unbelievable. I have good friends that live there, and boy, oh boy, they can't wait to get to Chicago. They're coming here in October. They go, it's just too hot. They've lived there a long time. They're looking to move. They're thinking Chicago, the center of the country, where our weather is actually gorgeous, except for the winters. But we haven't had a lot of bad winters. I don't recall pushing snow with my snowplow. I have a home. Once last year, once the year before. It's not too bad, guys. I got to just tell you that. So you put it all together. You try to come up with a game plan, and that's my job. I so much want you to read my twice daily reports, see my 2 videos that I put out in the morning. 5:15 I record one, 9 o'clock the other, and I'm giving you the ETFs, the stock markets, what I think going on. And I write in my own manner. I don't want to write volumes every day. All you end up doing when you do that is writing the same thing over and over. I want to write in bullet points with summations. Give you the key. I want 3 minutes of your time. I don't want any more than that on my writing. Actually, I don't even want 3. I can get you done in a minute and a half. And it comes in, you start reading what it looks like. I give you the summations. You go, there's what I needed. It's right in front of me. Because that's what I do. You know, traders don't have all day to read article upon article. You read like a madman because you're looking for information. That's what I'm out to give you. So if you'd like to get a free copies of it, 2 weeks trial, call my staff or go to iraepstein.com, free offers, move your cursor up here. When you get into the free offer area, and there'll be an icon up there, then once you're there, choose whatever you want. There's quite a few to choose from. Put them in your cart. We'll get it all to you. I'm Ira. See you first thing in the morning.